Welcome back to Coast Broker Buzz with Jen and Holly. We are talking about how unrealistic price expectations hurt the sales price. Today, we are going to talk about failed negotiations and deal fatigue. This is a real thing.
It really is, Jen. I mean, sometimes the deal initially looks really promising, and the buyers will submit offers, both sides will move into due diligence, and you get that momentum that builds, right? Then the buyers start reviewing the financial deeply, they're verifying the cash flow, and all of a sudden, unrealistic expectations surface. So, if your business cannot support that agreed value based on the financing or the earnings, it's gonna challenge buyers will challenge the price. And what happens is then it can cause the deal to collapse late in the process or after everyone has already invested time, energy, and cost. Or, that's why it's so important that realistic pricing from the beginning is going to create that smoother negotiations and just buyer confidence.
Yes, I think you brought up a really good point with the price. The price needs to match the debt, like the bank, the cash flow, the debt, what a lender is going to look at. And it depends on how qualified the buyer is, where they're getting the funds to purchase the business. Like this is a big thing because if the business doesn't if they need a valuation and the valuation doesn't come in for the price because it's overpriced, then we're going to have to renegotiate the deal to make it work. And then this brings up renegotiations. It makes the deal process longer. The fatigue comes in, and the deal can die.
Yeah. I mean, at the end of the day, right, our goal is not just getting an offer, it's really trying to get it to the finish line and to close.
And setting those realistic expectations from day one
Mhm.
is everyone's goal. So thanks for listening, and we have more to come next week.